At some point, Sears Department Store was so big that they were called the Amazon of their time. But today, the story is very different. After filing for bankruptcy a few years ago, it has been a constant struggle to stay afloat. How did this all happen? Let's take a look at the decline of this store, starting from the very beginning, of course. How it all started. A man named Richard Warren Sears got a brilliant idea to start selling wristwatches, and this was the beginning of the brand that would be known around the world as Sears. Funny enough, he knew next to nothing about watches, but his skill was in his excellent salesmanship, so he had to accept early enough that this was a little above him and hired someone who knew enough about watches. This man, Alvin Roebuck, came aboard in the 1880s, and the company began its steady rise to the top. Without a doubt, Sears had a really good run before it started its free fall to the bottom. A year after the company began, they started a mail order catalog that was a huge hit within a few years. In fact, it became so big that it went from about 80 pages filled with jewelry and watches to more than 300 pages filled with everything that was the talk of the town, including sewing machines and bicycles. Sears finally changed its name to Sears Roebuck & Company in 1893. The crazy thing about this is that both Sears and Roebuck didn't stay so long with the company. Just 2 years later, Roebuck made the wrong choice of selling his ownership stakes in the company. It was a bad decision because the company raised a lot of money about a decade later when it became publicly owned. Richard Sears then resigned as president a few years later and died about a year after retirement when he was just 50 years old. The exit of the founders didn't stop the company from growing to new heights. Sears had successfully tapped into the concept of catalogs, and this contributed a lot to its popularity. There was also the irresistible money-back guarantee, which offered credit to customers, a wide variety of available products, and a strong supply chain. Remember that this was still the 1880s, and these factors were considered a big deal. Thanks to the catalog, they could reach people in isolated areas, especially those who couldn't travel to the city easily to buy whatever they wanted. As cars began to grow in popularity, so did accessibility to urban areas. With this, Sears felt it was time to start setting up physical stores, and that's exactly what they did in 1925. They opened their first retail location, and this was also an instant hit. Within 6 years, they had generated enough sales that it was beyond their catalog sales. Sears was quickly to become one huge company that could be quite dominant in the retail industry for the next several decades. At this point, they became the #1 retailer in the United States and built the Sears Tower in the early 1970s. At the time, this building in Chicago was the tallest in the world, and it was looking good until things went horribly wrong. The decline of the store. The events that led to Sears declaring bankruptcy started about 40 years before that time. It all started with competitors. Is anyone really surprised? Other retailers started providing more competition, with department stores like Walmart and Kmart rising steadily to the top. Sears wanted to keep its dominant position in the market, and they decided the best way to do this was to keep buying a bunch of companies. They started with Discover Card as a way of going into the credit card business in the 1980s. However, they dumped it a few years later and focused more on Sears credit card. Unfortunately, they sold this in 2003. The next step was to set their eyes on the country's largest real estate brokerage at the time. Sears acquired Coldwell Banker Company, but it sold it again in the 1990s. This was pretty much what they did with several other companies over the years, but it wasn't a sustainable model. In 2003, they got rid of the Sears Tower, and they tried to find stability in the market. Meanwhile, Sears was busy with experimental acquisitions and sales. Walmart and other retailers around were firm in their missions and increasing in popularity. By the mid-2000s, it was already established that Sears was on its way down, and Walmart had already taken the #1 spot at this time. As Walmart was becoming more famous, Sears didn't work on strengthening their stores, but instead chose to make strange acquisitions, which really wasn't the best strategy. The story of the decline of Sears store won't be complete without mentioning the name Eddie Lampert. Eddie is a Wall Street investor and was known for his hedge fund ESL investments. This was a billionaire who pooled funds with other billionaires to invest in different companies. He did this successfully with AutoZone and Kmart at the time when Kmart filed for bankruptcy. Then in 2004, Eddie decided to buy Sears and merge this company with Kmart. This was supposed to be a smart move, where two struggling chains would provide support for each other and grow. But it wasn't. Before the merger, Sears was bringing in about $50 billion in revenue. But after the merger, this consistently reduced over the years. There was no single positive revenue recorded, and by 2017, it had gotten to as low as $20 billion. During this time, they had closed down hundreds of stores alongside negative store sales. It was so insane that Sears had more liabilities than assets. It's just like buying a house for $10 billion and owing the bank $15 billion. Could do without the negative equity. They had the craziest financial statements and didn't stop the financial obligations from pouring in. Before Eddie took over Sears, they were still in the top 4 biggest retailers in the country. But now the store is barely staying open after they filed for Chapter 11 bankruptcy in 2018. And let's talk about Eddie's role in this. Why they couldn't turn things around. Here comes a really important question. Did Eddie really want to turn things around for Sears, or he had more to gain from the downfall of this company? Although the odds were unarguably against him at the time that he took over the company, Eddie did have some faults of his. First, he had to deal with the economic recession, and then online retailers were coming up at the time. These retailers brought some serious competition, and he just couldn't keep up. Then there's a second side of this. From 2013 up to 2018, when Sears filed for bankruptcy, Eddie was the chairman of the company. However, he was also the CEO and chairman of his hedge fund, ESL Investments, which not only owned half of Sears, but had also given loans to the company. What this means is that most of Sears' interest expense went to ESL, and it was this same ESL that recovered the money when Sears filed for bankruptcy. If you're not getting the picture yet, what this means is that Eddie's company wouldn't lose even with Sears going into extinction. But that's not all. Eddie was also the chairman of Seritage Growth Properties, 40% owned by ESL and also spun off by Sears. Sears sold more than 200 stores to the Real Estate Investment Trust, and it was a good deal because the amount that came in for Sears. But when you look at it deeply, you realize that $2.7 billion may not have been a fair price for those properties, especially as Eddie Lampert was basically selling from one of his companies to another. So as you can expect, Eddie was accused of acting more in the interest of ESL rather than Sears. After Sears filed for bankruptcy and he left the company, there was a lawsuit against Eddie that ended in $40 million worth of settlement. The billionaire was also selling most of the company's assets at the time they needed money badly, instead of trying to increase its sales. This resulted in more than 30 of these companies competing for resources with others. Most importantly, his hedge fund was the one benefiting from all these sales. Someone with that much of a reputation can't be that bad at running a company that he sells everything that makes it stand and makes terrible decisions overall. Or can he? Sears suffered from really poor management, and it could have been that Eddie was just really bad at listening to the advice of each other. We can try to pin this down on ego and unwillingness to accept when his plan had failed. Then again, Eddie may just be the smartest person in that boardroom. And this was all part of his plan from the beginning. With this, a company that looked well positioned to compete with the greats in the retail industry is barely able to survive and will most likely fade out of existence in a few years. Now you know the story of how Sears Department Store fell from grace, and that's a wrap. Did you ever shop at Sears? What do you think this store did wrong? Let us know in the comments, and don't forget to subscribe to our channel. Thanks for watching.